All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, May 2nd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, so markets here, a bit of a volatile session, but they are off of the lows right now. And if we look on the daily time frame of the spiders here, you can see we're hovering right around that 20 period moving average. That is at 411.14. And we are ultimately going to save. It looks like the save, unless we completely sell off here in the next 8-9 minutes. It looks like they are going to save that that trend line. The SPX 20 moving average is at 41.23, so just a couple of points off. We'll see if they pop us up here into the end of the day, and the markets are off the lows. One of the things I talked about, I tweeted about this earlier, is you want to see the bulls. If you're bullish, you want to see the bulls hold this trend line and preferably the 20 moving average as well to improve technical positioning, because you don't want to go into tomorrow or any volatility event with a weak technical position. And they've done a good job of defending that. Volume has picked up a little bit today, so 92 million shares. We'll finish with over 100 million, which is good volume. The market came off the lows though, so we'll be more neutral. And one of the things I said this morning to my members is don't get too bearish here, because the volume picked up a little bit, but it was still ultimately pretty light. I never want to short light volume. Secondly, honestly, this is just really suspect. Take a look at that fake print there on GLD, by the way. We'll see if that hits tomorrow. But secondly, so the story today for the sell-off is, regional bank fears again, right? KRE coming down, new 52-week lows. That got punished all the way down to 38. Take a look at the monthly. Still a lot of support in this area, though. So, again, I don't see a ton of downside here, at least in the near term. But, again, I just think upside's limited. But to me, the reason why this is suspect is FRC failed yesterday, right? What did the market do, right? We talked about how boring it was yesterday. I mean, it was just a flat to negative day. Yeah, we did come off the highs a little bit. So a little bit of a reversal there, which looks a lot like the candle from the 6th, Thursday, Friday, Monday, gap up, can't hold the gains, big flush on Tuesday. Today, we did come nicely off the lows, though. But we're going into the FOMC. We knew that we've known the banks are a problem since back here, right? The KRE was puking back in March. We knew that was a problem. But now, all of a sudden, it's a problem that the market cares about. And it's suspect that this is happening one day. It's very convenient, right, that this is happening one day before the FOMC. It's almost as if they just, I got to think at it. I got to think of it like, they wanted to get, maybe they wanted to get some more bears on board and get them into puts so that they can pump us up one more time. I think tomorrow, and here's what I think likely happens, and the Fed funds futures also agree with this, but I think that they're going to hike 25 basis points. I think they will talk about pausing. And they should be able to pause. In fact, they can pause. If we take a look here at the 2-year yield, and I've showed you guys this before, but where's my 2-year chart? There we go. So 3.98. So that's hovering right around 4%. Yields came in pretty nicely this morning, by the way. That JOLTS data showing some layoffs here finally. So bonds were getting a bit here. Obviously, yields coming down because of that. But Fed funds rate here, it's 4.83 to 5, which if they raise by 25 bips, it'll be 5 to 5.25, right? That's over 100 basis points ahead of the 2-year yield. So that means the Fed can technically pause. I think here's been my theory for really since probably late March when we started to pump up here. I've talked about the possibility that the Fed will pause at the next meeting, and that will be your sell the news event. That doesn't mean the market won't have a huge pump first. It's likely that we'll have a huge pump. If they say the word pause and they're serious about it, the market will probably pump up to this area that we've been looking for a while, which is heavy resistance, right? The question is, does that last an hour? Does that last a day? Do we make a lower high, right? If we look over on the futures, on the ES here, you can make a case, I've got it drawn out already, you've got a broadening pattern there, and you could make a case that you're going to put in a potential diamond reversal. So maybe we pump up to 4,200, but then we can't make a new high, and then we come back down. There's lots of possibilities tomorrow. I would say on the bear side, if we sell off, don't trust anything until the close, and it better be on very heavy volume, and you better take out support. That's really what it comes down to. And then even after that, we have Apple. So that doesn't mean they can't, come in with the screw job Thursday with Apple. On the bull side, you need a close above this pivot. So, people were trolling me on Friday, like, oh, you're a dumb bear, like as if I'm like a perma bear or something. I know people think I'm a perma bear, even though I was, like I've said before many times, I was massively long in January. And really, it's funny, the bulls come out trolling, 2 up days, and where have we gone since February, right? The bulls haven't done much either. It's not like this has been a one-sided train. Yes, they have a slight higher low, but that's really it. So for the bulls, you can't really trust it until you close above this area. And if you go above this area and you close back down below these pivots, that's a huge red flag. So that's what I'm looking at into tomorrow. That's kind of the game plan here, long or short, bear or bull, whatever. But right now, bottom line for today is it's very convenient that they did that. They dumped it on bank fears a day before the FOMC. And right now, market's set to close here. And it looks like they're going to save that 20 moving average, or at least, close us right on it. Typical market maker thing, right? But they are saving this trend line. So I would say into tomorrow, technical position is slightly better, but we did do some chart damage today. If things were so bullish, why do we even have this pullback, right? The bulls should have been able to continue up. So I'm still kind of neutral going into tomorrow. Big picture, market's going lower. Fed wants the market lower. Don't fight the Fed. But in the short term, we can get, a bid up into that 420 area. Sorry about that. I got those Amazon guys. So sorry about that. But over to the triple Qs here. So triple Qs down a little bit less than the spider. So not terrible. A lot of the selling in the SPY came from the XLE and the XLF. Remember, bank fears, etc. Why was the XLE down? Crude light got hammered today. This is going to 70, and really, right now, it's not that far off. So here's your pivot from December. We broke down, we consolidated. That's where there's going to be support. It might actually pierce it at this point. I was hoping it would give us a little bit more of a bear pattern to push down into that area. But either way, that's where it wants to go. But XLE, XLF leading to the downside. And, big tech still holding up, right? Microsoft's hanging in there. Meta's hanging in there okay. Amazon actually green today. So nothing terrible there. And then, of course, Apple, just stuck in that rising wedge. We'll be watching that going into Friday. By the way, AMD reporting after hours. So I'll be taking a look at that as well after the market closes here. But tech hanging in there. Okay, again, we're watching this kind of rising wedge here. Do we hammer on that top side tomorrow? With a big pop? Do we pierce through it? There is a gap at 329. It's not that far off. Then obviously the lower end of that trend line is down there. But again, this is obviously going to do what the spiders do for the most part. Russell, as you could predict, the weakest. Look, it's barely off the lows here compared to the spiders. And we did make a lower low. So you've got, lower highs and lower lows here in the near term on the Russell. And it's barely holding that 170 level. I just don't see a ton of upside here for it. I mean, if we get a really big pop, can it get to 180, maybe the 200 moving average? It's certainly possible, but it's going to take a heroic effort from the regional banks and from, really the SPY to kind of drag it up there. But Russell definitely on the weaker side. Dow here also on the weaker side, and that looks like it's going to lose Friday's low. So the Dow's reversed all of Friday's gains here. And again, we talked about that 343 level, and that's been pretty good resistance. We didn't quite get there. We got 342.59 yesterday, but pretty good resistance there, and it is below the 20 moving average. Remember, the Dow's price cap weighted, so we don't make too much out of it, but the Dow did come back in. Spiders here, market's closing, and there's the bell. So we did lose the 20 MA. It's a slight negative. Let's look at this SPX. Yeah, slight negative there, but again, we're still neutral here. I'm not going to make too much out of it. We closed at 99 million shares. That's good volume, but we did come off the lows. So again, let's not make too much out of it here. It's all about tomorrow's reaction. We don't even care really what the Fed says. It's all about what the market does. Anyways, let's get over here to the semiconductors. So that was down almost 1% today. And we talked about that 20 moving average being a level of resistance. It was, as well as this upsloping trend line. So that basically backed off of that, right? I mean, you could basically say that that hit and got back tested. If this is going to go higher, I think it probably needs to consolidate. If you just get a pump on it, I just don't see a lot of gas right now, because you're coming into this area here where you broke down. And that's where it's backing off of. But, you know, I guess there's room for a higher low, but I'm not thinking there is one. Again, semis have been leading to the downside here, and that is a negative for stocks. IGV also on the weaker side, you know, giving back all of Friday's and Thursday's gains. So basically just holding that 50 moving average. This barely came off the lows by the end of the day. So definitely a sign of weakness there for IGV. I believe Oracle reports. I think they might be reporting off schedule. I think one of these guys is reporting shortly, but either way, IGV coming off the lows here, but not very much here, and much weaker pattern. And again, this was a market leader for the last couple of months, and over the last week or so is now a laggard. So again, keep that on your radar. Dow Transports here did come off the lows with everything else, still below that 200 moving average though. Nice 1, 2, 3 surge. And then right into that 20 MA, and it did back off there. Again, transports on the weaker side. I do not like what the charts are telling me on the DJT. I think Uber had a nice day today, though. Uber did get a big pop, and yeah, up almost 12%. So we'll see that. Probably wants to go challenge double top here. So at least one transport getting a little bit of a bid there. But overall, the sector, you know, the jets particularly not acting well. Anyways, we mentioned bonds a little bit, but the 2-year getting a bid up 29 basis points. Again, bonds are still in just kind of a holding pattern. Here's the 10-year yield that did reverse all of yesterday's gains. Very choppy, okay? We're not going to make too much out of it. Right now, long-term yields are going higher, much higher. But for right now, they're just kind of in a big kind of consolidation pattern. Could you get kind of a move? We talked about that 3% area on the 10-year. Could you get a blow-off move to the downside into that area tomorrow? Absolutely. I mean, I don't know if it would happen in one day, but could you get that down there shortly? If the Fed, you know, mentions something, it's absolutely possible. But that's really all the downside I see. And then same thing with the 30-year. You know, same setup there, but you do have higher lows on the 30-year yield for what that's worth. Housing here, XHB did come off of the lows like everything else, but still finished down just about 0.5% here. So it's hanging in there for now. ITB, same thing. Came off the lows. They're still in an uptrend, and these have still been stubbornly strong here. Again, I just think they're very overvalued, as I've mentioned many times, but the market can do what it wants for a while. VNQ, down 1.7. Again, nothing great here. This is, I mean, to me, this is not bullish consolidation anymore. It's just, you've taken too long here. I just don't like it. You know, could we get a bid up? You know, could the Fed pump us up? It's possible, but this is just not a pattern of strength. I know you have the weekly inside bar there, but you're below the moving averages, and you're, you know, below this red bar. So, you know, could I be wrong? I certainly can. Could they reverse this up tomorrow? It's certainly possible. But right now, it's just not showing any sort of strength, and it's in a weak technical position. So bear that in mind. XLF also coming back in. We mentioned that earlier. 50 MA was resistance, slight lower low there on the daily. 32 is decent support for right now. Again, we'll see if the Fed says something, maybe calms the fears into tomorrow. KRE, obviously new 52-week lows. KBE, new 52-week lows. And broker-dealers in danger of losing this level here. That is a weekly bear flag, and if that goes, I don't think 420 is going to be that major, because we've consolidated above it for 6-7 weeks. So we can go through that if we start to break down. So be careful with XBD here. Shifting over to energy, again, crude, we're looking for about $70 here, maybe a pierce, and I think that should be good support, maybe for a move to 75. But crude's been soft here, and you had some pretty good, you know, good uptick here in the sell days, right? So on these breakdown candles, this is a breakdown candle, this is a breakdown candle. We had an uptick in volume, and you know, it's definitely been on the softer side. You know, I got stopped out of SCO, unfortunately. You know, just thanks OPEC, I guess. But, you know, it is what it is. I still think that, to me, you know, OPEC's cutting because they know what's coming. So that's one way of looking at it, and I think that's been the case so far. But if $70 holds, you know, again, you get back to 75, you get through that, you can get to 80, and then the 200 moving average, and so on and so forth. But if this area goes, this is going down, and it's going to take out this low. So crude in a weaker technical position here. The bulls really need to step in and reverse this by the end of the week and really save that $70 handle. But other than that, I'd say there's a little bit more of a bear bias now on crude futures. XLE down 4.5, well, almost 4.5 there. That barely came off the lows. You held that 80 handle, and this is kind of that last pivot right there before you had that power move, that little breakout bar. And that's where it's holding right now. Again, I still see kind of momentum declining here in XLE, but you know, we tried to consolidate. Remember, I said like it needs to shape back up a little bit and kind of tighten up if it's going to get up to that 90 handle, and it just hasn't been able to. So definitely on the weaker side, as was XOP. So that testing the 120 area again, that's where it reversed right there, 120. So decent support there, but I think these are all headed lower at some point. So just be careful with energy here. OIH also taking a pretty good hit, down 6%. So big move as soon as it lost that 280 area. It's been all to the downside and should test 250 again, maybe a pierce of that before getting a bounce. Net gas also lower today, down over 4%. Still coming off the lows a little bit, but can't get out of its own way. Ever since that little pop there, they did halt it at the highs, and then sellers were able to regain control. We did fill this gap from the 25th at 223, and it's trying to hold that 20-day moving average, but much weaker price action here for nat gas over the last couple of days, losing that kind of pop there that we got on Friday. The dollar index here down 0.25%. You know, again, it's hanging in there. It's not, you know, I would, like I said, the last couple of days, I would have preferred us to uptick, flag, and then pop. And it just, that little rollover there, I just am not a fan of that. And it did come well off the highs today. So, you know, finishing down 0.25%. It was bright green this morning, but it came off the highs. So this can still get down to that 100 handle. And again, that could be a catalyst for the SPY to get to 420 to 425. So we'll be watching that over the next couple of days. Or it could be, you know, that bonds get a really big bid if we get recession fears, and that could be your catalyst to that move there. But gold getting a nice bid. It did lose that green bar, so that is a slight negative for gold. And then it got a bid off the weak dollar this morning. Again, banking fears too coming into play. Bitcoin got a bid as well. Gold up 1.74% currently on the futures. We'll see if it can regain. I mean, you got a decent little chance here if you can get above 2028, which is where we are. Maybe go retest 2050. Again, that would probably coincide with that same type of move on the dollar. Silver, interesting price action. I talked about this yesterday. It looks just like Bitcoin from last week, right? We had that down move, little attempted inside bar, bear action, then a huge pop, and then it came way back in, and then the next day it was green. And it's almost the same type of action here. You know, that down move inside bar, big pop was red, and then today is green. If it's going to go higher, it's going to need to consolidate. But I still think it, based on yesterday's action, I think it needs to go down to 2350. But it did, you know, come off the lows there, and they did save that that 20 moving average for now. But yeah, interesting how Bitcoin is, or you know, silver is basically kind of reflecting Bitcoin here by about a week or so. Platinum here, again, we talked about that 20 MA. They pierced it and it's holding. So if you did take that, this is still safe. Just don't let it lose 1053 on a daily close. So, but that's okay. That should get back to 11, you know, maybe 1110. But if you're in the money, take profits, you know, once you're comfortably in the money here, and protect it, because like I said, this is an aggressive play. It's a quick play. You don't want to stick in it too long. But platinum up 1% there, and it held the 20 MA, so that should get a pop on the daily. Copper here backing off again $4 hit yesterday, 20 MA hit, and an engulfing reversal today. So again, that's poised to go down to that 375 area. Bitcoin here, again, we talked about this getting a bid, and it did. So it's holding that 50 MA, right? They've hammered it. Got a slight close below it, and then, you know, you got back above. So right now it's hanging in there. You know, I'll give it, you know, the upside bias again till still to 32,000. If it, you know, it can get there, but if you start losing this area here, you lose that 50 MA, you lose this pivot, it's probably done for. But again, you have the FOMC tomorrow, so I can't rule anything out at this point. And again, I'm still pretty much neutral on the spiders really until then, until we see what kind of price action we get off of that. Let's take a look at AMD here. AMD up slightly in the after hours. So yeah, not much going on here. So it doesn't look like their earnings are out. Again, no big deal, right? It's just a little bit of a, you know, it'll move the semiconductors, it'll move tech for right now. But again, it's all really about that FOMC tomorrow. Again, on the upside, again, you get up to that 420, but the bulls need to close it. You know, it's been a long time, right? We've been in this area since the beginning of April, and we haven't done anything, right? So they need to get above that and close above that and confirm it. The bears, you need to take out this pivot, and you need to do it on a heavy volume. I mean, 120 million shares at least. If you can do that, then I think a top is in. But until then, it's really prove it on both sides here, and definitely be careful because this is a treacherous market, and they're trying to shake everybody out on both sides here. Anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.